and then the bottom line. The bottom line is going to be your net income. All right, another document you're going to see from time to time, it's called the NEC, non-employee compensation. And so when you hear the term non-employee, well, what that means is you've got an individual who's being compensated and they're not a wage earner, which means they're not going to be issued a Form W-2. And most of us on the call here have probably either they work now or they have worked in the past as an employee and they were given or issued a W-2. So if you've been self-employed, sometimes you're going to get that NEC, but not all self-employed individuals receive it. So I'll use me as an example. I am a wage earner. I teach at a couple colleges, accounting and QuickBooks and some tax classes. And then as a tax guy, I have a tax business. I am paid by my customers, and sometimes they give me checks. Sometimes they make a Zelle payment. I've got a couple clients, for some reason, they will only give me cash. And that's all part of my compensation. I don't get a 1099 NEC from anyone, but that may not be the case for the client that you're working with. They may have received a 1099. You want to ask them about all of their income. And that's something I learned a long time ago. When you're talking to someone who's you're preparing a return, ask them, tell me about all of your income. And they may start parsing it right then and there. They may say, well, I've got income and it's not taxable. I always tell them, well, tell me about it. I can figure it out. I can figure out what's taxable and what's non-taxable. But let's go ahead and make sure we get that information from you. But the 1099 NEC typically is going to be for that self-employed individual. And typically, it'll appear on that Schedule C as in Charlie. And we're going to show you how to actually go to the tab in the tax layer program today, populate the NEC, the 1099 NEC, and subsequently that income will be reported on a Schedule C. And then there's another type of, and again, this is not an exhaustive list. These are typically the ones you're going to see. The 1099K, it's called a payment card and third-party network transaction. Big changes for tax year 2022. The threshold to issue them by the entities has been lowered to $600. So you may see a lot of people who are engaged in perhaps maybe some type of digital services. They're online, they're selling stuff, they're being paid by some entity, and maybe they've made $900. Well, they're going to get a 1099K. And it simply means, again, it's an information return, and then we'll make that determination where that needs to go. Most likely, it will go on the Schedule C. In some cases, it goes on the Schedule E. But again, big changes. And this is another thing. We always talk about it. In the tax world, you're going to see changes every single year. And sometimes the changes are significant, and sometimes they're moderate. And what it is you just learn about the current tax year. You've got your publication 4012. As we get notices, as we get information from the IRS or United Way or what is called the IRS Spec Division, we'll share that with our volunteers. And then when you come to the site, we'll give you a briefing, and you'll be spun up. Yeah. And that's what we're going to do. We get a lot of people who are ensuring that you have the current information. Okay, any questions about some of the information returns? While John is trolling the chat, sometimes you'll have a conversation, someone will give you an information return, and you'll look at it and you'll say, I don't know. And that's that's okay. My sister, she's a pathologist, and she's been working as a doctor for like 20 years, and she still gets cases, and the doctors say, hey, what is it? She says, I don't know. I've got to do some additional work. So sometimes at the VITA site, we'll have someone with some type of income, and they'll ask us, where does this go? Is this taxable? Is it non-taxable? And it's okay to say, I don't know. I've got to look it up. I've got my smart book here, but I haven't seen this before. And I think you will see things, whether you've been practicing for 1 year in the VITA program or you're a paid practitioner and you've been doing it for 30 years, you're going to bump into stuff every season and you're going to say, I don't know. But you'll be able to figure it out. And one of your go-to documents, in addition to that 4012, is IRS publication 525. 525 is the taxable and non-taxable document. It does a really good job. For example, court awards. You'll have someone who gets a court award. They will not have the court instrument, i.e. the decision of the judge. And so you'll have usually some type of information return or maybe some type of receipt. And then when you'll ask those questions of the taxpayer, and then you'll be able to determine, okay, this is taxable, or no, this is not taxable. An example of a non-taxable item from a court award might be back pay that's finally been paid. Pardon me, that back pay is going to be a taxable event. There's other events that are non-taxable. And again, that 525 does a really good job explaining that. Okay, then John, with that.
Oh, I have a question. You use the term information returns, and I always thought that was a tax return that you had to turn in, even though you don't owe taxes. So I'm confused. Those are the forms are called.
Sure. Let me go ahead and explain that. So you have individual income tax returns, and typically in the VITA program, we're going to do the 1040 or the 1040 SR for seniors, and then you have information returns. And we'll speak of the general rule. When you talk about information returns, you don't file those information returns as a taxpayer with the IRS. You're going to be issued those returns by an entity or an employer. Does that help you out?
Yeah, I guess the word returns confuses me because I think of tax returns, but these are information returns, which are 1099s.
Yeah, that's a type of information return, again, issued by an entity, and then the taxpayer is not going to file the 1099 MISC with the IRS. That's something that's given to the taxpayer.
I think,
But when you
I
see
think also,
tax return,
also an information return can be the opposite, right? I mean, you're making a kind of a disclosure. It, you know, a tax. I think you would also call it like for instance, a PE, right? A company has to make an election, right? Is kind of an information return as well.
but when you see the term tax return, what that means is someone is entering data into a software program. They're hitting print or they're hitting save, and then that tax return, if they have a filing requirement, they have to file that tax return with the IRS and then sometimes the FTB. All right. Okay. All right, let's go to our next slide. Okay, so the child tax credit. The child tax credit, you saw this in 2021. If you're new, this is going to be changed for tax year 2022. It's going to revert back to what is called the pre-2021 form. So what that means is the generous credit that was allowed in tax year 2021 is changing, and it's going to go back to a smaller credit, of course, obviously. And this is something you'll hear me say 1,000 times. There are certain types of credits that are available, but in order for a taxpayer to receive a credit on their tax return, they have to qualify. And I think that's probably the same for just about anything in life. Anything you do in life, you got to qualify. You got to qualify for a raise. You got to qualify for a job. You got to qualify. And that's if the taxpayer is able to qualify for certain credits, then they're going to get this. And of course, for tax year 2022, it's significantly smaller. So if you had someone who was getting $3,600 in tax year 2021, now they're down to $2,000, that will affect their bottom line. And I think you're going to get those questions. And I think probably the best way to do it, say, yeah, I understand, but Congress has changed the rules for 2022, and now it's a smaller amount for taxpayers. And this is something you're not going to see in 2022. We're talking about tax year 2022. You're not going to see those monthly advances that some individuals received from the IRS. So those advances are gone. All right, let's go to our next slide. And then the child and dependent care credit, another credit that is significantly changed for tax year 2022. If you go back to 2021, there's a refundable situation that you saw on the 2021 return. For 2022, it's non-refundable. Now, when you hear the term non-refundable, it simply means it's a dollar for dollar reduction of the tax, and you're not going to get anything back. If you have a refundable credit, then of course you may have zero tax, and yet the taxpayer still gets refund money back, if you will. A lot of the stuff is done automatically, but what you want to key in on when you're talking about expenses, and these are monies that you're spending for someone to watch your kid. It could be some type of tutor time, kid care. It could be a private individual working in their private residence watching kids. Now, my understanding is if you're going to do that in California, you're supposed to be licensed. I think if you watch a certain amount of kids, you have to have certifications like first aid, things like that. But the bottom line is on the form, it's the form 2441 that'll be populated. You're allowed in expenses to calculate the credit $3,000 per child. And so if you have $7,000 for one kid, understood, but for the purposes of calculating the credit, you're going to plug in 3,000. And again, this is a non-refundable credit this year. Big changes. All right, next slide. Okay, the earned income tax credit, there's both a federal and both a state. And when you're talking about preparing a return, a lot of times you don't have to get into the state return to make changes. And I use the term piggyback, which means California will essentially conform, if you will, to the federal return. But what does happen, again, you do have both a federal EITC and a state EITC, and they are two different animals. And you're going to get people asking you about that. And all you got to do is put on your IRS hat or your state hat. And then when you have that conversation, you got to differentiate between federal tax law and state tax law. So this is federal. Big changes. If you remember from last year, you had seniors, in some cases, were getting EITC, but now we're going back to the age limits that existed prior to 2021. So that means if you don't have any kids and you qualify, which means you have to have AGI and income thresholds at a certain amount, you got to be 25 years of age in order to get the EITC. And it maxes out at 65. And so that's going to be a big change for some of our VITA clients. The credit, you don't have to worry about the dollar amount for the credit. It's going to be calculated automatically. You just have to go to the tax return. You have to enter data. Age is important. And then, of course, wages, AGI, adjusted gross income, is going to be calculated automatically for you. And then there was a rule, you probably remember this if you're a returning volunteer. You could go back in time and you could use your earned income, like, for example, in 2019, to calculate EITC in 2021. Well, that rule's gone away also. And then as far as the amount of EITC, some of our clients, because they're low income and they may have a couple, 2 or 3 kids, some of them will get a EITC, a federal EITC of well over $6,000. And so for some of our clients, it's a really big deal. It's a really big deal. And there's no such thing as the advanced EITC. That went away many years ago. And so this is, in some cases, a big surprise to some of our clients. And some of them will actually ask you, is this correct? And so all that means is you're going to explain to them, well, you're eligible for the credit. The credit for some people is over $6,000. It's a refundable credit. And so, yeah, that's what you're going to get. And that's just the federal EITC. In some cases, they're going to get other credits on their federal return, and then they're going to get credits on their state return. And so you might have a VITA client walking out with a total refunds, federal and state, of $10,000 or more. And you may scratch your head and say, how's that possible? It's possible because of these refundable credits, both federal and state. And so again, it's a good thing because obviously a lot of our clients, they're low income, and this makes a huge difference in their life. Okay. And I see a note here, EITC rules for the state is different. Yes, there are. Because when you're talking about the state of California, you can think of the state of California as a cat, and you can think of the federal government as a dog. Two different animals. And the Revenue and Taxation Code covers California. The Internal Revenue Code covers the federal government. So yeah, there are big differences. Oh, and we do have state training. And Fred, keep me honest here. That state training is in the middle of January. I want to say it's either January 13th or 14th, but we will have some state training, and I believe it's on a Saturday via Zoom. And I'll announce that next week, the time, date, location. But again, it's via Zoom for the state training. That's the Franchise Tax Board.
Saturday, Jerry.
You say again?
It's also a Saturday Zoom class.
And do you know what date?
Yeah, I don't remember right now. I know it's a Saturday Zoom class also. I can give that later shortly here as soon as I find it.
Okay, yeah, we'll announce that date and time next week. And then one point before we move on, when you're talking about the state of California, there's training material available, and we'll definitely announce that training material. A lot of this stuff is available online. In my practice, my paying practice, a lot of times I'll go to the Franchise Tax Board and I'll ask for documents which are sent to me promptly, or a lot of that stuff is hung on their website. So they do a pretty fair job. And then if we need to, which we don't often, but if we need to call the IRS or the Franchise Tax Board, both of those organizations have telephone numbers for VITA preparers. And so we can reach out and say, hey, we got a question here. We think it's in scope. We pitch the question to either the Franchise Tax Board VITA people or IRS VITA people, and then they provide an answer. And that will happen from time to time, certainly not every return, but we do have to reach out from time to time. Okay, how about the next slide? Okay, just more federal earned income tax credit, some things that you want to maybe have an awareness of. It changes every single year. And I've had this conversation. People ask me, hey, Jerry, my refund last year was $3,000. My refund this year is only $1,500. Well, what gives? And I always tell people, I say, well, the tax law changes and you have many different administrative changes. And so that's just the way it is. And so what I do is I'll prepare the return based on the information you give me, based on what I know, and then we'll have someone review the return. But at the end of the day, your refund for tax year 2022 most likely will be different from 2021. That's doesn't stay static. And there's different ways to do it, but that's how I explain to people. Things change, and so when you talk about changes, again, the EITC amount, earned income amount, it changes because what happens is your software is going to look at a couple things, and one thing it looks at is earned income. And when you're talking about earned income, think about your wages as a W-2 wage earner. Think about your net income as a self-employed individual. That's part of earned income. Let's say you've sold some stock and you've had some long or short-term capital gains. That's not considered earned income. And so your software, once you make those entries, will look at those items that are considered earned income to calculate the federal EITC. And of course, when you're talking about the state EITC, it also looks at earned income. There's phase out, which means if you're making a whole lot of money, you're not qualifying for EITC. So your software will phase it out. And sometimes someone will say, hey, why don't I get EITC? And you can look at the adjusted gross income or the earned income, and you can say, okay, you make too much money based on the number of kids you have. And so you're not going to be eligible for the federal EITC. And state EITC, they have different amounts, which we'll talk about during the state training. And then here's something you're going to bump into once in a while. I've seen it a couple times. It's called, there's a limit. Again, to qualify for EITC, you have to go through a number of different qualifications. And one of them is there's a limit on investment income. And investment income, also called portfolio income, also called unearned income. If you have $10,300, $10,300 then you're over that limit, which means if you've got interest income of 10,301 or dividend income of 10,301 or capital gains of 10,301, you're over the limit. And so what that means is you're not going to get EITC, even though you may be eligible on the other test. Typically, you're not going to see this because if you do the quick math, if you're getting a little over $10,000 of interest income, you have a trainload of money in your bank accounts. And so you typically don't see this in VITA. But keep in mind, in the VITA program, we don't qualify people based on net worth. We qualify people based on income. So I've had people in the VITA program, they came in, I'm talking to them, and they make, $50,000 a year, and they got $600,000 in their bank account. And they just happen to, they qualify for VITA, and they come in and we help them out, even though they got a lot of money in the bank. You will see that from time to time. I think the joke and hopefully I'm not offending anybody, but last year I saw some person drive up in a Lamborghini SUV. I didn't even know Lamborghini made SUVs, but anyway, this person had a car, I don't know, $80,000-$90,000, but apparently qualified for the VITA program because of income. All right. Any questions about EITC before we move on?
Jerry,
Yes.
that income cap for dividends and things, would that include tax-free income like from the California municipal bond?
No, because that's not considered income, or I should say that's not considered income that's taxable.
Okay, thank you.
Sure. All right. And I do see a question from Jennifer. It says something about age limitations. And so John, can you track that question? Maybe I can take a shot at it.
The question
not.
is VITA for all age groups or is it just exclusively for seniors?
No, it's for all age groups, and of course the individuals, they have to qualify based on income, and then also, like we talked about, there is a scope of service. So there's certain things that happens in a taxpayer financial life that we cannot help them out. And so let's say you had a taxpayer who has a small corporation and wants that small corporation return to be completed. Our answer would be, we don't do that. That's not part of our charter. So they would have to seek out a paid practitioner to complete their corporate return. There's a lot of things it's outside of scope. And if people ask you, well, why are certain things outside of scope and why are they in scope? Well, the short answer is, like any field, you cannot master everything in the field. And so what the IRS says, okay, this is a program for basic tax preparation. We're going to limit those topics, and your scope of service, that's in your publication 4012 toward the beginning of the document. All right, we can move on. Okay, this is something, and we'll show you when we get into the software. This is not rocket science, but there's certain things you're going to be asked at the VITA site. So it's good to be prepared with some type of response that makes sense. And so when you're talking about gross receipts, think of, and this is someone who's self-employed, which means they're engaged in some type of activity, they're being compensated. This is their business, if you will, a small business. And so when you ask about gross receipts, this means all of the income that they've received, all of the income that they've received. And some of it will be evidenced by a 1099 of some type. And like I think I gave the example, I don't get 1099s from my customers. They give me either currency, they give me a check, they make a Zelle payment, sometimes wire transfer. It all goes into my business bank account. And the way I track gross receipts, I can go to my bank and I can look at my deposits for a particular year and say, these are all of my receipts that I receive for my business. And so that's what you want to convey to your client, your VITA client. And the term cash method, it simply means in the VITA program, we only work with cash basis taxpayers. And that simply means they're going to report their income when they receive that income, and they're generally going to deduct their expenses when they pay their expenses, the cash method. And if someone says, I'm an accrual method taxpayer, that's one of those things that's out of scope. We can't help you. You need to go to a paid practitioner. In the VITA program, there's certain things we don't do with a Schedule C. We will not prepare a Schedule C if someone has inventory. If they're a retailer, we don't do that. If they have employees, we're not going to prepare a Schedule C. It's going to be that lone wolf, if you will, that's engaged in some type of activity, either a service or maybe they're typically a service, and they're selling the service, they're being compensated, and yes, they want to track their income. A lot of people ask me, how do you track income? And like I mentioned before, there's a lot of different ways. You can utilize QuickBooks, for example. That's one way to do it. Another way to do it, I think I mentioned to you, I had a client, really smart guy, makes a lot more money than I do. And I asked him, how do you track your income? And he had self-employment. He also had a Schedule E, which is rental property. And he literally pushed across the table a piece of paper, yellow in color, kind of like one of those legal things. And all of his income items were written very neatly in pencil. And I asked him, I said, okay, this is how you track your income? He goes, this is how I track my income. And he was a doctor. And so I went through it, asked him some questions, says, okay, you're tracking your income. You're a cash method taxpayer. This is your income. These are your gross receipts. And that's another way to do it. It may not be the most efficient, but for him, it was the way he tracked income. You're going to see different things. You're also going to see people ask you, or when you ask them, what were your gross receipts in 2022? They're going to look at you and they're going to say, what are gross receipts? And then you can say, well, that's all the income that you receive from your business. And there's different terms you can use. We use the term gross receipts. And again, sometimes evidenced by a 1099, sometimes not. And going back to the cash method, when someone receives, I'll use me as an example again. One time, one of my clients gave me a check, took it home, put it on my desk, forgot about it, ended up under a bunch of pieces of paper. About 3 months later, I'm cleaning my desk and thinking, what's this? Oh, this is a check from one of my clients. He gave it to me. I guess this would have been tax year 2019. I found it tax year 2020. Well, because I received it in 2019, and that's called the cash method, cash basis, I had to report it on my 2019 return. And thankfully, I hadn't filed my 2019 by then. And so I was able to file and report all of my gross receipts. Most of the time, it's going to be easy breezy. People are going to come in. And it's been my experience in life, and maybe you're going to see something different from time to time. Most self-employed people know almost to the dollar what they've made. If you ask them, they pretty much know, yeah, I made $8,500 last year. You're going to get that response. But again, it's important to ask the question. And then when you talk about expenses, the bottom line is they have to be ordinary and necessary. There has to be a business purpose, and it has to be reasonable in nature. Now, in the VITA program, we're not auditors, but when someone comes to me and says, Jerry, I'm a self-employed dog walker, okay, and I have expenses. I pay my 13-year-old sister. I pay her to do some shopping for the doggy leashes and the doggy bones and the doggy treats. And I pay her as an independent contractor, and I pay her $500 an hour. I'm thinking, okay, well, then that's what is called unreasonable compensation, and I don't feel comfortable doing your return. Oh, and here's another thing. Because she's self-employed like you would have to issue her a 1099. We don't do that in the VITA program. If you're self-employed and you're required to issue a 1099 to other self-employed individuals, we don't prepare a 1099. Outside of scope, they're going to have to go to a paid practitioner. And then self-employment tax simply means this is the Self-Employment Contributions Act. If you remember when you were a wage earner, you had to pay, most wage earners pay into FICA, the Federal Insurance Contributions Act. And when you're self-employed, you have to pay into Social Security called SECA, and that'll be calculated automatically through the Schedule C. So if your net income is $400 or more, your software will calculate self-employment tax. And then conversely, if you're self-employed, you're allowed a deduction done automatically in the software, 1/2 of that self-employment tax as a deduction. So you'll see that from time to time. Most people are okay with that. They understand it. Sometimes young adults, they have no concept of what it is. So you simply tell them, this is Social Security, and it's part of the tax law, and you've got to pay it. And then what happens is it goes and basically to Social Security, and then these monies will be credited to your account. And then, of course, you want to keep in mind when you're talking about the Social Security system, there is no direct correlation between your Social Security wages and the amount of your Social Security check. So, for example, let's say you're making $100,000 a year, and let's say you retire and your Social Security is $3,000 a month. Now, let's say you're making $25 million a year. When you retire, your Social Security check may be $3,600 a month. Again, no direct correlation. And then estimated tax payments, you're going to see this. I know St. Killian does a really good job. So I got to give credit to the people last year and the year before. What they do, they being the St. Killian crew, they make sure people understand that if they've made estimated tax payments because they're self-employed mostly, then what we do is we make sure we enter that data into the software, and then that way the taxpayer has been given credit for those quarterly payments they've made. And then some taxpayers will make both federal and state. And if they do have that requirement, they should make those quarterly payments. And then in the software, and we'll show you how to do that. Again, you ask them, did you make payments? And then this is what I'm going to do. If Fred overrides me, so be it. When people come into the VITA site and they go, I've made estimated tax payments, the only thing I'm going to ask them to do, the only thing I'm going to require is, okay, well, give me a list of those payments and give me the dates of the payments and were the payments made to the IRS and or the state of California. If they go, well, do I need checks? You don't need checks for me. If you get audited by the IRS, then yeah, you probably need a documentation. But again, we just need the information when they made the payment. If they bring in the check, so be it. We'll make note of that. But we want to make sure that if they've made those payments, it's entered into the software. A couple other things that are outside of scope. You may have heard of what is called the home office deduction. We don't do that in the VITA program. Outside of scope. If you have someone who does have a home office and they are insistent about getting that done, then we simply tell them it's outside of scope. You should go to a paid practitioner. And again, if they ask you, well, who do I go to? I refer them to societies, the California Society of Enrolled Agents, California Society of Certified Public Accountants, California Society of Tax Consultants. And then that way you're not giving the one name of your friend Maria who does returns. No, you just go to that society, plug in your zip code, and you're going to get a laundry list of practitioners, and you can pick one that you want to use. And then a lot of times they're going to ask you, well, Jerry, or whatever your name is, they'll say, what do these people charge? And I'm thinking, I don't know. You got to talk to the practitioner, and sometimes you're going to get a practitioner that charges reasonable amounts, and sometimes you're going to get a practitioner that charges a lot. But that's between you and that person that you're going to hire. Okay. Any questions about the Schedule C overview? John, no questions about Schedule C?
Questions?
No question. Okay, I think this is a great time to take a break. I've got 10 o'clock or 10:01. Let's come back at 10:11. 10:11.
Hey, Jerry, I started the recording late. I didn't catch it at the beginning. I think the part that we missed was, I think, an introduction that you kind of given in other sessions. So hopefully it's, there's not much I can do about it. And then
Yeah, I
also,
think you caught it toward the
Yeah.
beginning, so I think we're okay.
one thing I
Hey,
don't know is I saved it. I didn't know the default was to save to my desktop or save to the cloud. I saved to my desktop, but I have no idea where on my desktop it's being stored. So when you recorded, how did you do it? Because you did the previous ones.
If memory serves me right, I would record to the cloud.
Okay. Maybe I'm gonna stop the recording and do that because I'm worried that it didn't record on my
That
desktop.
would probably be a good thing if you stopped it and then started it again and recorded to the cloud.
Okay.
Something better than nothing. Hey, John, I'm going to send you the form 1040 for tax year